let's understand where we are headed in the markets and what we can expect for the rest of the week. And let's bring on board Vinay Rajani, the CMT, Senior Technical and Derivative Analyst at HDFC Securities for that. And good afternoon, Vinay, and just want to get your view on that. What's the outlook for the markets? Because, till yesterday, we had seen 6 consecutive days of gains. Do you believe that that's all that was there to this upcycle rally that we've seen? Or do you believe that, the bears are going to once again take charge and that was the end of the rally, and now we're once again looking to continue the kind of correction that we were seeing until 2 weeks ago?
Yeah, good afternoon, and thanks for having me on the show. So I don't expect this market to reverse on the downside. There could be a minor profit booking or running correction, but the way it has surpassed the resistances, the way it has behaved in this recent rally, we have seen almost 8% rise, 1900 points rise in the Nifty, while Bank Nifty has risen more than 9%, and small cap index has risen more than 15%. So this has been fairly strong rally, we can see, after a long time. As Ansh mentioned, that the RSI of the Nifty reached to 71. That has happened for the first time after September 2024, when Nifty was at all-time high. After that, after 5 months of period, we have seen that that has reached to the overbought level, a 71 level. But that should not be taken as a negative sign. I feel that overall trend is quite bullish. Yesterday, we saw that Nifty took out the resistance of 100 and 200 days exponential moving average, which was placed at 23,400. Now it is expected that the previous resistance will act as a support now. So 23,400 is a strong base for the market. In case of correction, I believe that Nifty should find support there and bounce back again. Ultimately, we are expecting Nifty to reach a target of 24,125. The logic behind 24,125 happens to be the 50% retracement of the entire fall that we have seen in the Nifty. So Nifty made an all-time high at 26,277 in September 2024, and recent low was 21,964. So if I see the 50% of this entire downfall, the 50% retracement comes in at 24,125. That should be the next target for the Nifty, and 23,400 is a very strong support. And the way FIs are positioning in the index future right now, no doubt they have started covering their short, but that's still net on the short side, because long to short ratio of FIs in the index future at the beginning of the day was 0.47. That means huge short covering is still pending by the FIs, and until we see that happening, coming into the favor of bulls above one ratio will give some strong sign of reversal at that point of time. So there is no logical reason I can find technical that Nifty will correct sharply from here. So on dips, we are asking our traders and clients to go long. 23,400 is a very strong support. On the upside, 24,125 that we are targeting in the Nifty in the short term.
Okay, so thanks for sharing those levels with us, Vinay. But just want to follow that up with your outlook on the broader markets, because of course, we've seen over the last couple of trading sessions, whenever there's a gain, it's the broader markets that are leading it. Whenever there's a cut, the broader markets are the ones that face it on the chin the most. Now, after this initial, profit booking and this euphoria, once you believe that this goes away from the markets and investors are feeling a little bit more settled with their portfolios, would you think the strategy going ahead should be large caps purely, or do you believe that the valuation correction in SMIDs has been significant now, and that also merits a revisit or a relook by investors for their portfolio?
Yeah, so the kind of return which mid cap and small cap generated in 2023 and 2024, that kind of returns we are not expecting in the small cap and mid caps, because that kind of rally and momentum we will not be observing in this rally. No doubt, because of the oversold condition, the recovery was sharper in small cap stocks. Small cap index has given 15% return from the lower levels recently, and Nifty has just risen by 8%. But if we talk about the sustainability, yes, sustainability for the entire year, positionally for next 3 to 6 months or 9 months, we see more sustainability and stability in the large cap segment, because for last 4 years the ratio chart of Nifty divide Nifty against the Nifty small cap has been quite oversold. That means in last 4 years Nifty underperformed small cap index in a huge way, like it underperformed like anything, and that is going to reverse, like mean reversion we are expecting. So sustainability and stability will be there in the large caps, looking for positional returns I'm talking about. But yes, short term, small cap, mid cap can give higher alpha, but that those trades should be taken strict stop loss. With strict stop losses, then only traders will be able to generate returns. So previously, out of 10, 7 stocks were doing well in the mid cap. Now we are expecting out of 10, 3 or 4 will do well on sustainable basis. While in large caps, we are expecting that that ratio will reverse, and out of 10, 7 large caps will do better. So positionally, we are more bullish on large caps.
So large caps is the strategy going ahead. On that note, Vinay, what's looking good in the markets right now? What are some stock-specific recommendations that you would like to make to our viewers?
Yeah, so after 8% rally in the Nifty, it might happen that sector rotation will come into the play. And the sectors which have not participated in this rally are the FMCG and the IT sector. IT sector started doing well since yesterday, and I think it is headed higher and it can do well from here. So IT stocks, Coforge is one of the strongest IT stock because it is still trading above the 200 days average. So Coforge can be traded long around 7,900. Stop loss for the traders can be kept at 7,700. On the upside, I'm expecting a target of 8,200. The second sector, as I mentioned, FMCG has not participated, so FMCG can do well. One of the strongest setup on the charts from the FMCG space is the Godrej Consumer, which is trading around 1125. I think one can go long in this for the trading around 1125. Stop loss can be kept at 1100, and on the higher side, we can expect a target of 1160. So overall, I feel that in this kind of environment where profit booking is coming, the sectors which have not participated can do well, and IT and FMCG are the stocks, and Godrej Consumer from the FMCG and Coforge from the IT can do well.
So Godrej Consumer and Coforge on Vinay's radar. Vinay, thanks so much for joining us with your outlook on the markets as well as your sectoral and stocks specific picks for our viewers.
If you like this video, then like, share and subscribe to ET Now.